In the heart of Germany, a financial giant rose from obscurity, promising innovation and success. Wirecard captivated investors with its rapid growth and ambitious plans, setting the stage for an empire worth billions. But behind the facade of prosperity lay a complex web of deceit. The unraveling of Wirecard exposed one of Europe's largest corporate frauds, leaving a trail of questions and shattered trust. Founded in 1999, Wirecard grew into a global payment processing powerhouse. Its charismatic CEO Markus Braun led the company through acquisitions and partnerships, expanding its reach worldwide. Wirecard's stock soared as profits skyrocketed, making it the darling of the German stock market. Analysts praised its innovative approach to finance, while few questioned the underlying business practices. However, whispers of irregularities began to circulate. Skeptics pointed out discrepancies in financial reports, but the company's soaring stock price silenced most critics for years. In 2019, investigative reports raised serious concerns about Wirecard's accounting practices. Questions arose over missing cash reserves and inflated revenues, signaling the beginning of the end. The scandal erupted when Wirecard admitted to a €1.90 billion accounting fraud, leading to the CEO's resignation and a full-scale investigation by regulators and law enforcement. Wirecard's collapse sent shockwaves through the investment world. Shareholders saw their investments vanish overnight, as the company's market value plummeted from billions to zero. The aftermath left Germany's financial sector reeling. Regulatory bodies intensified scrutiny over corporate transparency and accountability, aiming to prevent such scandals from recurring. Wirecard's auditors, Ernst & Young, faced scrutiny. Their failure to detect fraud raised questions about their oversight. Investors demanded answers, while regulators launched investigations into accounting practices. An audit trail revealed discrepancies. Wirecard's reported revenue growth was inconsistent with market realities. Suspicious transactions and off-balance sheet entities were flagged by forensic accountants. Former employees provided critical insights. They described a culture where pressure to meet targets overshadowed ethical considerations. Whistleblowers faced retaliation, discouraging internal reporting. The company's complex structure included subsidiaries in tax havens. This made it difficult to trace funds and verify transactions. Offshore accounts became central to the fraudulent activities. In 2020, Wirecard's CEO, Markus Braun, vanished amid the scandal. His disappearance heightened suspicion. Braun was later found dead, adding another layer of mystery to the case. Regulators discovered fake sales records worth billions. Wirecard had overstated its assets and profits for years. This manipulation created a false image of financial health. The German Federal Financial Supervisory Authority took action. Wirecard's board was ordered to resign. The company faced potential criminal charges for its fraudulent practices. Investigations uncovered a web of shell companies used to launder money. These entities were set up in jurisdictions with lax oversight, allowing illicit funds to flow undetected. Wirecard's collapse sparked a global financial crisis. Trust in the German banking system plummeted. Investors lost billions, leading to widespread economic uncertainty. The scandal exposed weaknesses in corporate governance. Wirecard's board failed to prevent fraud. Independent directors did not scrutinize the company's financial statements thoroughly. International law enforcement agencies collaborated on the investigation. Interpol issued a red notice for key suspects. Global cooperation was essential to unraveling the fraud. Financial experts analyzed the impact on investors. Many lost life savings due to Wirecard's collapse. Recovery efforts were complicated by the intricate nature of the fraud. The scandal highlighted the risks of overly optimistic projections. Wirecard promised rapid growth in payments technology, but underlying fundamentals did not support such claims. Legal battles ensued as victims sought compensation. Lawsuits against Wirecard's executives and auditors aimed to recover losses. Courts would decide the extent of liability and damages. Wirecard's collapse led to stricter regulatory oversight. New laws were proposed to prevent future fraud. Increased transparency and accountability were emphasized to rebuild trust. The scandal impacted Germany's reputation as a financial hub. International investors questioned the robustness of German financial regulations. Rebuilding confidence took time. Forensic accountants played a crucial role in uncovering fraud. Detailed analysis of financial records and transactions helped piece together the fraudulent scheme. The scandal revealed flaws in auditing standards. Wirecard's auditors faced criticism for not detecting irregularities. Calls for reform in auditing practices intensified. Wirecard's operations spanned multiple continents. Complex international transactions and diverse business units made it easier to conceal fraudulent activities. The scandal affected the global fintech industry. Other companies faced increased scrutiny to ensure their financial practices were transparent and ethical. Wirecard's downfall exposed the risks of rapid expansion without proper controls. Overambitious growth strategies can lead to financial instability and fraud. The scandal prompted a review of corporate governance structures. Boards must ensure robust oversight to prevent fraud and protect shareholder interests. Investors learned the importance of thorough due diligence. Relying solely on public financial reports is risky. Deeper investigation is necessary to avoid fraud. Wirecard's collapse underscored the need for stronger regulatory frameworks. Governments worldwide introduced new measures to prevent similar financial scandals. Wirecard's collapse exposed weaknesses in international financial oversight. The company exploited loopholes, operating across borders to avoid scrutiny. Its complex structure hid fraudulent activities from regulators. Investigations revealed a sophisticated scheme involving shell companies and fabricated transactions. Wirecard used offshore entities to mask its true financial state, misleading investors and auditors alike. The scandal led to arrests and resignations at the highest levels of Wirecard's management. Former CEO Markus Braun was indicted for fraud and embezzlement, marking one of Europe's largest corporate scandals. The fallout from Wirecard's collapse reverberated through the global financial system, causing significant losses for shareholders and raising questions about corporate governance and ethics. Wirecard's collapse revealed systemic failures within the financial industry. Investors, regulators, and auditors all fell victim to deception, highlighting urgent reforms needed. Regulatory bodies worldwide are now implementing stricter oversight. Wirecard's scandal serves as a stark reminder of the importance of transparency and accountability in finance. Investors must remain vigilant, scrutinizing company reports for inconsistencies. Wirecard's story underscores the risks of complacency and the necessity of due diligence. The global economy relies on trust and integrity. Wirecard's deception shattered that trust, affecting not just shareholders, but the broader financial system. In the aftermath of Wirecard's scandal, financial institutions worldwide are reevaluating their auditing practices to prevent future frauds and protect investors. Wirecard's downfall illustrates the devastating impact of corporate fraud. Its collapse has sparked international cooperation in tightening financial regulations. The lessons from Wirecard's scandal extend beyond financial markets. It calls for a culture of ethical business practices and robust internal controls. As we reflect on Wirecard's rise and fall, it is crucial to recognize the importance of transparency in rebuilding trust in the global financial ecosystem. Wirecard's collapse marked a turning point in corporate governance. It has prompted significant changes in how companies operate and are regulated. The scandal's impact will be felt for years. It underscores the critical role of transparency, accountability, and regulation in maintaining the integrity of financial markets. Wirecard's story serves as a powerful cautionary tale. It reminds us that vigilance and ethical standards are essential in safeguarding the financial health of our global economy.